Hello, traders. It's 8:03 a.m. Chicago time on Thursday, the 15th of February, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, as always, we're here to read what we expected, look at what happened, plan out the day, hopefully, at least the morning, the opening, execute, and then manage. That's basically the process. Overall, the market is positioned higher. The market's rally on the indices was interrupted yesterday by the close, and it continued to drift up as expected. We've pushed up as high as 27.1950 overnight, and we're holding above the mid for the overnight session. I'll go over that in a minute. Crude oil has rolled to April 2018. You may not have seen my announcement. We're trading CLJ8 or CLJ18, depending on your data feed. Crude is trading $60.10. It's the laggard today, down 0.68%. The leader today is Bitcoin. On my quote board, I don't usually quote it because it's all over the place, but Bitcoin has almost reached $10,000. I think I shared a chart of it yesterday or the day before. The days blur for me. There's a lot going on, but the expectation was a push down to 5,700, got to 6,000, and has bounced to about 10 grand. Pretty good pop from that level. That's the leader today on my quote board. The Dow Jones is up, is leading the pack, followed by the Nasdaq, the S&P, and so on. The market's allocating the risk. As far as what's in front of us today, we've had a couple of numbers earlier. I won't go over that. I think the overwhelming response yesterday, based on my question of what should be cut out, it is this part. But I do need to look at what could impact the day, and so I'm always checking the releases. I don't see anything of consequence coming up, so let's move directly into the review portion. Here's what we expected yesterday. All right. So that's the I don't know why I have cannabis at the bottom of the screen there. Not sure why YouTube is putting that up there, but the primary expectation, given that we were opening right against the 2643 MC point of control, the expectation is that the market is likely to drift downwards to find buyers. So the expectation was for a slow downward drift that gets into 2627. There was a fair amount of volatility coming into the open yesterday. With the CPI release, the market absolutely and completely refuted that. This primary expectation was blown away right from the open. The secondary expectation is that, again, the positioning of the overnight session before the open yesterday was such that the low is vulnerable. However, the secondary scenario, and I did say yesterday that the scenarios were, there wasn't a higher chance, in my opinion, and it's just an opinion and a guess, there wasn't a higher chance that one would dominate another. I viewed the possibilities equally. The expectation was for it to push through the prior day's low at 34.25 and then get responsive and start moving up through the low volume node, the primary target being 2655. That did not happen. Okay, we did push higher, but we didn't see any move down at all. The overnight session was completely refuted. The third scenario was to push into the low volume node up here at 54, 55, and then find its sellers and start to turn over. Why? Again, CPI came out strong, and that would push yields up. That would push the dollar up. It would be net negative for most dollar-denominated commodities, and for the market as yields rise, there's an attraction. There's a better chance that the bigger money would allocate to those products, to those safer, higher yielding products. But again, the market refuted that. What played out yesterday for me was scenario 5, the last scenario, which was an open auction and then impulse up, and then just basically surprising the market to push to 26 to 22, initially consolidate, and then continue on to the SOC at 26.74, and that's the extent of it. Now, I've talked about 27.0275 since last Thursday or Friday, that and I came in this week saying we're likely to grab that price in the first couple of days or so, and that's exactly what it did. Not that I'm correct all the time. I don't seek to be correct all the time, although it's a nice boost to my ego, I guess. But what it actually did was just that. It had buyers right away. Initially, we saw it as responsive, moving from the lower distribution up. You could see it did not try lower by much. It got to 26.4275. It tested. It's really important to note that it tested the MC point of control, this price here. That's the key balance price since the sell-off on the 5th of February. And the market basically moved down to it, moved down to it by a tick. So it's a tick test. And then we found an impulse up and away from it. So as we squish this down a little bit so you can see where that comes from, here's where that price comes from. This black line here is the most traded price since the sell-off on the 5th. And so this is what we saw. And as soon as we saw that, I did tweet about it. As soon as we saw that, you had to be cautious on the sell side. It just was not accepting what was previously accepted value, or the most accepted price in the area. We expect normally for the market to be tangled at an MC point of control, or at a point of control in general. Again, a point of control by definition, a volume point of control by definition, is the mode of that distribution, if you're into statistics. Also, basically another way to say it, it is the most traded price. It is the price that was most accepted in the entire distribution of prices for that particular day. And in the case of an MC, which stands for micro composite, which means it's a combination of a whole bunch of days that traded around each other. As the market trades around itself, or up and down through the same prices, we start to combine those prices to see where the overall acceptance is, and that overall acceptance is called the MC VPOC, and that's at 26.43. We tested it by a tick. We pushed right to, early on, we pushed right into the point of control, the prior day's point of control, 26.62. Actually, we missed it by 2 ticks at first, and then we had a pullback. This bar here, we had a pullback, and we came roaring through. Okay, so if you look at it on a shorter time frame on my trigger chart here, this is what it did. It pushed into the LVN, right? So it tested down against the MC point of control, and pushed to the edge of the primary distribution, which is what we would expect, pull back, push into the low volume node right here. We got a nice deep pullback. This right here started to look like scenario number 2. And then we would look for it to dip down and then move up. But what it did is it just pushed right through into the MC, into the VPOC and the prior day's close. pull back pretty deep through the mid, and then we get the impulse. The impulse here is 20 points. 20 points. So that's a 3+ standard deviation move. And then it basically behaved like a trend day. So what do we have? We have a lower distribution, and then we have a middle distribution, and we have an upper distribution, with the point of control shifting lower, middle, upper. Right, the point of control ending up at 26.97 1/4, and the market pushes into the 27.0275. So that wasn't expected from 26.42, but we got it, and we did it on relatively low volume. Believe it or not, the market, the RTH session traded 1.53 million contracts yesterday on really high volume, basically 60 points. So the participation on the long side, was light, relatively light. The volume per 15-minute bracket until the close, you could see these black lines here. That's the 20-day average for that particular bracket versus the bar, which is the current volume for that particular bracket. You could see that we spend a fair amount of time below the average, whereas the sessions from last week here, the Tuesday session was pretty dead. Everybody saw that. Volume was very light, but the prior week we were always higher, and of course that average is moving up. It's only 20 days. It's moving up rapidly given the volume that we've had. But still, yesterday we traded relatively light, given the range that we have covered. Okay, so that's what we gleaned from yesterday. As far as the overnight session opened up right where it closed, and it just continued it continued the move higher. The auction, as I said, was interrupted by the close yesterday. The buyers clearly could not find sellers. They're still seeking higher prices, could not find sellers, so we immediately pushed up. And we continued higher in the overnight session to 27.1950. We're holding above the mid. We're holding in the upper distribution. We have a very similar profile to the last day, to the prior session or so. And so overall, the market is taking the CPI news and just basically saying we don't care. I did post about the yield this morning. Let me see if I can find that. I did post about the 10-year yield, which is really important. Let's grab that image. So here it is on Twitter, in case you're not following. Yield keeps pushing higher. It's at 2.91%. And rising as the price of the 10-year futures drops. And I think I would expect that would be a threat to the market, but so far it just doesn't care. The volume overnight is twice the what we would expect to be the norm, which is rapidly changing. And we have basically the same level of activity as we did yesterday. As far as what we're expecting going forward, what has the market accomplished so far? Okay, Monday we're basically in balance. Tuesday we were definitely in balance. We traded inside of Monday, and then we had a big drop in the pre-market yesterday, and then the market is pushing higher. That is the greatest clue that you can get with regards to what the market sentiment is. The fact that you have this number that that the market's shrugging off, that it was anticipating on this day here. Market was not directional on Tuesday. Was anticipating this news. The news was worse than expected. I think it's 0.5 versus 0.3 expected. And then the market shrugs it off and starts to push higher. This is a threat to the shorts here. I would not keep pounding on the shorts here. We're pushing through the mid of the swing down. We're starting to get to push towards the key LVN from the 5th, the big sell-off day. We have basically taken back a good portion of what we did on the sell-off. So this is really important for the shorts to consider. Okay, good point. The overnight inventory is long on price and flat on volume. The delta here, as you can see down here, the delta is right on the zero line. The aggressors in this product in the overnight session are balanced. So what are we expecting for today? Some of these levels, I actually had a busy morning, so I didn't update a lot of these levels, these Sigma levels. They'll be updated if you get the flex levels or the bookmap levels from my server. They'll be updated a little bit later on as soon as we're done here. This morning, given the extent of the move up and how much we've moved away in the overnight session, we have basically a 15 or so point gap. The expectation initially is for the market to be responsive. I'm looking for the market to respond back and come back into line to 26.97 and at 98, potentially even push down into this low volume node. It's not likely, but it could. And so I'm looking for a responsive push, and I'm looking for an area to base off of to buy. And on the buy, I'm looking for 27.3150 as the primary target. That gives us about 35 points of range today. There's nothing on deck that I would think would hold us off on attaining that. But overall, I expect the market to balance out a little bit before it starts to push off. We could be falling back into the VIX dropping to 19 yesterday on the SIBO. We could potentially be getting back into the gap up. Don't close the gap. Leave a gap zone behind. Leave the gap zone behind and then start to push higher. If we leave the gap zone behind, then I'm looking for 27.50 as the next key area to test. And now we're looking at some pretty, we're looking at getting back into some template days from before, from the 5th and from the 2nd. And so it's, we're back into the big consolidation we had at the all-time highs. Essentially, we're starting to work our way towards 2,800. But that's what I'm looking for the primary scenario. It's responsive, but overall pushing. If we do not see that, and we see a push up, I'm looking for it to stall out and then become responsive back to 26.97. Push out. If it's not able to hold a push out of yesterday's range, I'm looking for it to do some repair down to 26.85 before it moves back up. I expect this profile to look something like a B shape with an upper distribution and then a lower distribution where it rests. That's the secondary idea. This morning, how am I trading this? Okay, fantastic theories there. But how am I trading this? I'm simply going to sit on my hands for the first about 20 minutes or so, and I'm looking for any evidence of the side that has more power, that has more control. So a couple things need to happen. This morning is I need to pay attention to what kind of an opening swing do we get, pay attention to how much volume steps in on those swings. Do we get responsive or initiative? And then does the market keep struggling on the way down? So if you look at the rotations, do they quickly fall through to the downside and grind up, or are we pushing higher and then pulling back with pause, right? So until we determine that, because we have an equal chance of either one playing out, until we determine that, it's really hard for me to step in front of this market and take a strong position. There are plenty of scalping opportunities, of course, but I'm really looking for that stronger position. We're moving away from the accepted value area and the point of control from the sell-off day. We're starting to auction through the fifth. The day of the 5th where the sell-off happened, and so I don't want to overstay my shorts at this point. The market's already indicated that it's already indicated that it's more interested in a long side. Okay, so those are the primary ideas. So this morning the book looks crowded a little bit. Oh, okay. For those who want that's the URL in Bookmap for the flex levels, and I'll post it on Twitter for IRT. Actually, in IRT, all you have to do is add the flex indicator and select Futures Trader 71 for the ES, and you'll get that. So that's where we stand this morning. It's a fairly noisy book. So as soon as we open, I'm looking for what does the market print against? What is the depth, and how are we printing against that depth to determine what the first trade, the initial salvo of trades, is going to look like. Okay. Good luck today, and I'll catch you tomorrow. Take care.